Can you guys hear me? Good morning. Good morning, good morning, good morning. Can you guys hear me? Good morning. How are you doing today? Can you guys hear me? How are you doing today? How are you doing today? Good morning. How is the sound? How is the sound? Good morning, good morning. How has been your week? I hope it's been profitable. Good morning. Good morning, good morning. How has been your week? How has been your week? I hope it's been profitable. You all are welcome to today's live stream. I feel so excited to have you in today's live stream. You're welcome, you're welcome. You're welcome. Start dropping your questions. Start dropping currency pairs you want us to look at. Drop it in the comment section. Where is the money today? Where is the money? Which of the instruments do you plan to trade today? Let us know in the comment section. Also, let us know your price on that instrument. Which instrument are you planning to trade today? Let us know in the comment section. Also, let us know your buyers on the instrument. Let us know your buyers on the instrument. Gold, USD card sell. USD card. My bias for USD card is bullish. We'll look at the chart in a few minutes. My bias is bullish. Williams, is your bias long term or short term? Your bias is it long term or short term? Mine is bullish long term. Okay, but we'll look at the chart. Okay, mine is bullish long term. Can you all see my screen? Can you all see my screen? USD CHF, what's your bias? What's your bias on USD CHF, Mr. Raphael? Mr. Peps, what's your bias on gold? What's your bias on gold? Let me know in the comment section. Okay. I greet you all, Mr. Joseph, Mr. Raphael, Mr. Adebayo, Mr. V. I missed on GU move this morning. I missed GU move this morning. Okay, let's start with gold. Let's start with gold. Okay. Let's start with gold. Let's start with the daily time frame. Okay, so yes, candle closed. It's a bullish candle. Now you can see the market has been struggling to break out. Okay, it broke out, and this low, the low of this candle. Okay, before the formation of this spinning top, you can see price has tested that area several times. You can see price has tested that area several times. Okay, so let's see what we have on 4-hour time frame. Based on how yesterday candle closed, you can see it closed below the low of this candle. The candle closed below the low of this candle. That tells me gold is bearish at the moment. That tells me gold is bearish at the moment. But let's go down to 4-hour. After the close of yesterday candle, what pattern do we have on 4-hour time? Let's see. See the pattern we had on 4-hour yesterday. And you see the pattern. We had an hanging man. This is an hanging man, and the next candle closed as a bearish candle. This is a bearish reversal pattern. And you can see this pattern formed at a previous resistance level. Can you see this? It formed, this pattern formed at a previous resistance level. Now, if you look at gold from this point to this point, you will see that gold has been in a range. It had formed a resistance and it has formed a support. Can you see that it has formed a resistance? It has formed a support. And you can see that what we have here is a bearish reversal pattern. It is a bearish reversal pattern. Now, this pullback, it could be that a fair value gap was created after the formation of this pattern, and that could be the reason for this pullback. Let's confirm. Let's go down to lower time frame. After the formation of this pattern, let's go down to 1 hour. Let's see. It created a fair value gap. Okay, so this is 1 hour time frame. You can see what we had here on 1 hour time frame. This is a shooting star. So this is a shooting star. And if you go to 15 minutes, let's see, we want to identify the fair value gap that was created. Okay, we want to identify the fair value gap that was created. Okay, so this is what we had on 15 minutes, no fair value gap here. Let's go to 5 minutes. Let's go to 5 minutes. I think a fair value gap was created for the pullback. So this is 5 minutes. You can see we had this fair value gap here on 5 minutes. And you see this fair value gap? Okay, this could be the reason for the pullback. But let's see if we still have one. Let's see if we still have on 1 minute. Let's identify the fair value gap. That could be the reason for the pullback. Okay, so let's see 1 minute. As you can see, it broke out from the 5 minute fair value gap. Let's see 1 minute. Okay, so you can see 1 minute. Can you see 1 minute fair value gap? This could be the reason for the pullback. This could be the reason for pullback, this fair value gap on 1 minute. Let's go back to 1 hour and see. So you can see. Can you see? That could be the reason for the pullback. Can you see that? That could be the reason for the pullback. And after price filled the fair value gap, can you see what happened? Can you see? Engulfing candle. This is an engulfing pattern on 1 hour time frame. At the moment, gold is bearish. Gold is bearish at the moment. This is an engulfing pattern. Gold is bearish at the moment. Gold is bearish at the moment. Let's see the risk involved. If you are selling gold at 100 pips, the risk is high. 100 pips and your TP should be aimed for. Okay, your TP could be at this relative equal low. Your TP could be at this relative equal low. That's about 114 pips. Risking 100 for 114 pips. That risk reward is too poor. It's too poor. If I'm risking 100 pips, at least I should aim for 150 pips as my first TP. Okay, so this is where it's aiming for. This would be its first target, and this would be second target, and this could be the third target. This low, which is an area of liquidity, would be the next. It could clear the low residing. Let's go to daily. Let's see daily. Okay, so it could clear this low, this relative equal low. Okay, it could clear this relative equal low, and below this relative equal low, I think there's a fair value gap. You can see this fair value gap. So it's likely gold will pull back to fill this fair value gap. If it does not fill this fair value gap, it's likely going to test this broken resistance turn support. That's my take on gold. Gold is bearish at the moment. Gold is bearish at the moment. Also, if you look at DXY, okay, if you look at DXY, dollar index is bullish. It means gold. It means the dollar is strong. Okay, it means dollar is strong. Let's start with the daily time frame. For dollar is bullish. My bias for dollar is bullish. As you can see, we had a resistance here. Can you see? And price broke out from that resistance area. This tells me that the dollar is bullish. Dollar is bullish. So I wouldn't trade against the dollar. Okay, so this pullback could just be the pullback in the market could just be to fill probably a fair value gap was created. Okay, let's confirm that. Let's confirm that on lower time frame. Probably a fair value gap was created after the formation of this candle. Let's go to 1 hour. Okay, so price is likely pulling back to fill this fair value gap. Okay, it's likely pulling back to fill this fair value gap that was created here. Okay, you see this fair value gap? So it's likely going to come fill this fair value gap before going bullish. If you apply your Fibonacci 2, from this swing high to this swing low, Fibonacci, you can see price pulled back into this fair value gap, which is at a premium area. You see that? It pulled back to fill this fair value gap, which is at premium area. So if you work with this previous range, price is at premium and it has to pull back to discount. At discount, we have a fair value gap. You can see this fair value gap here. So this is where dollar is coming to. This is where the dollar is coming to. Okay, this is where I expect dollar to pull back to. Then from this zone, look for buy. Look for buy. Okay, so that's my take on dollar. Dollar will be bullish from this zone. Okay, and that is when you should GU, EU, AU, NU. Okay, wait for price to pull back to this zone. So if you work with this previous range, this will be premium. Now the current range we work with is this. This is the most recent range. Okay, so price is currently at a premium. We want to see price pull back to discount before we go bullish on dollar. I hope that is clear. I hope that is clear. Let's go back to currency pairs. Okay, so that's my take on gold. Gold is bearish at the moment. Okay, gold is bearish at the moment. Gold could also pull back. Let's see on 1 hour. Okay, on 15 minutes. Let's see. Okay, so it has created a fair value gap. This would have been the best entry for gold. This would have been the best entry for gold. After this candlestick closed below the low of this candle, that would have been the best entry for gold. If one had entered sell for gold from this point, stop loss would have been, let's say, 50 pips, 50 pips stop loss. By now, you're paying profit of close to 70 pips, 70 pips by now. Okay, so this is the entry for gold. Personally, I can't take this trade. I would only consider selling if price pulls back to fill this fair value gap. Okay, if it pulls back to fill this fair value gap, then I would consider selling gold. Right now, I can't take the trade because the risk is too high. The risk on it is too high. I hope that is clear. So that's my take on gold, Mr. Joseph. Any question on gold before we move to the next pair? Okay, let's move to GU. Let's see GU. Let's see GU. If we expect SY to be bullish, then we should expect GU to be bullish. Okay, we should expect GU. Sorry, we should expect GU to be bearish. We should expect GU to be bearish. So let's start with the daily time frame. So you can see how yesterday candle closed. It closed bullish. Yesterday candle closed bullish. The volatility yesterday was very low. There wasn't much volatility in the market yesterday. I think it didn't go into up to 50 pips. Okay, high and low, 60 pips. But buy and sell wasn't up to 50 pips. Buy sell wasn't up to 50 pips yesterday. The volatility was very, very low, and that was because there was no major news to drive on price. There was no major news. Okay, so after the close of yesterday candle, the last candle for this was yesterday candle. Let's see the pattern we had on 4 hour. Let's see on 4 hour. This is what we had on 4 hour. Okay, so you can see the pattern we had on 4 hour time frame. Hanging man, then the next candlestick closed bearish. Can you see that? Hanging man, the next closed bearish, and we had a resistance here. You can see price tested this resistance. If you go back here, you can see this was a previous support stone resistance. Can you see that? This was a previous support stone resistance at this point, also resistance, as you can see. So price tested the resistance. So this was a bearish reversal pattern. This would have been a good entry for GU. This would have been a good entry for GU. Sell from this point, stop loss, let's say 30 pips, and aim for 60 pips. As you can see, this would have been the best entry. So selling from the current market price, personally, I think is at a very high risk. Selling from the current market price, I think is at a very high risk. Price has already moved 44 pips. This would have been the best entry. It's very important that you know the best entry level for your trade before you execute. This would have been the best entry. And if the market is trading almost 50 pips below this level, I don't think that's a good risk to take. I don't think that is a good risk to take. Okay? I don't think that's a good risk to take. I always advise if the market have gone 30, 40 pips from your entry level, if the market have gone 30, 40 pips from your entry level, you shouldn't take the trade. You shouldn't take if the market has gone against you. Um, if the market has gone against you 40 pips, you shouldn't take the trade. The risk will be too high. So it's still bearish. It's still bearish, but this is not the right time to sell. This is not the right time to sell. You had missed this move. We had another this morning around around 6, 7 a.m. After this pullback, that would have been the right time to take a sell trade. After this pullback, I think this pullback was to fill a fair value gap. Let's confirm that. This pullback here was to fill a fair value gap that was here. Let's go to one hour to see. So this pullback, you can see a fair value gap was created here at this point. That's the reason for this pullback. So one would have sold after the pullback. Can you see that? This pullback was to fill this fair value gap. This fair value gap. We had a fair value gap here. You can see this fair value gap. That's the reason for the pullback. So one would have sold after this pullback. You can see this pullback here was to fill this fair value gap. So one would have entered sell after the formation of this engulfing pattern. This would have been the second entry. This would have been the second entry for GU. And if you had sold GU from this point, your stop loss, let's say 20 pips, 20 pips, okay, went in your direction 38 pips, okay. So it's still bearish. It's still bearish, but this is not a good time to take a sell trade. What do you guys think? What do you guys think on GU? What do you guys think? So if you want to sell GU, also let's look at the fundamentals. Okay, I think the fundamentals also influenced the events this morning. CPI data was released for Great Britain and it was negative. You can see it. You can see by 8 a.m. the data was negative for CPI. So for GBP CPI, so GBP is expected to lose value. You can see that it is expected to lose value because the data was negative for GBP. That's the reason for the bearish move we saw on that massive drop on GU is as a result of these fundamentals. Okay. So that's my take on GU. Okay, let's look at USD card. Let's look at USD card. Let's look at USD card, Mr. Atonda. I'm trying to understand your question. Second bearish. Is it on GU? About entry at the close, second bearish candle because it's closed the hanging man on GU. Let me see. I'm trying to understand your question. I'm trying to understand your question. You mean this hanging man? You mean this? You mean this hanging man? Yeah, you could have also taken a trade after this candlestick closed below this. This is an hammer. This is an hammer. You could have taken a sell, but this is where you should have entered. This is where you should have entered. Entering a sell at the current price is at a high risk. That's what I think. Wait for pullback if you want to sell. Okay, wait for pullback if you want to sell. Let's look at USD card. USD card. USD card. USD card. USD card. USD card is bullish. So USD card is bullish. Let's see. Let's start with the. Let's start with the weekly. With the weekly. Let's see what we have on the weekly time frame. Okay, this is a bearish setup. Okay, and you can see since the market opened this week, USD card has been bearish. Since the market opened, it has been bearish, and the bearish move could be to just clear the liquidity residing at the previous low of last week, the low of last week. That could be the reason for the bearish move so far. Now you cannot be selling USD card from the current market price. Since the market opened, it has done, you can see over 104 pips. 104 pips. So if you have not been selling USD CAD, I don't think this will be the right time for you to sell. This would have been the best entry for USD CAD after the close. This was on Monday. This would have been the best entry for sell. If you had wanted to sell, this would have been the best entry for sell. And now you should profit of close to 70 pips. So if you didn't enter sell from this point, you cannot enter sell from this. You cannot enter sell. And I think USD CAD is trying to fill, let's see, a fair value gap that was created after the formation of this candle. Let's confirm that. Let's go to 4 hour. I think there's a fair value gap it wants to fill. I think there's a fair value gap it wants to fill before going bullish. So you can see on 4 hour, we have a fair value gap on 4 hour. So I think it might want to fill this gap before going bullish. Okay, this fair value gap. Okay, to be its destination before going bullish. That is what I see on USD CAD. You can't buy, you can't sell at the current market price. You cannot sell. I don't think it's to be wise to sell. Okay, so this is where I'm considering going bullish. Okay, I'm considering going bullish on USD CAD. Okay, if price does not get to this zone, all I need to wait for, since liquidity of the low of last week, the low of last week has been cleared. All I need to see on the chart for me to buy is a reversal pattern, a bullish reversal pattern on time frame, shifting structure on maybe 1 hour time frame or 15 minutes time frame. That is all I need to see before buying USD CAD. So my bias on USD CAD is the bullish move could be a retracement, it could be a pullback, okay? It could be a pullback, but I'm looking out for buy on USD CAD. I hope that is clear. I hope that is clear, Mr. That's my take. Long time is bearish, okay? Long time is bearish. Okay. So that's my take on USD CAD. GBP JPY. Who caught GBP JPY bearish move? Who caught GBP JPY bearish move? Who caught GBP JPY bearish move this morning? And that's because the data was negative. That also contributed to this massive drop on GU, on GJ. Negative reports also contributed to this massive drop on GJ. Okay, so this won't be the right time to sell. If you sell at the current market price, that will be due to FOMO. That will be due to FOMO. If you sell USD on GBP JPY at the current market price, this is where you should have entered sell. This is where you should have entered sell. 15 minutes. This would have been the best entry. You can see what they did here. This pullback, this bullish pullback was to fill this fair value gap that was created here. Can you see it? Can you see it? So after this fair value gap got filled, all you would have done is to wait for a bearish reversal pattern to form. Let's go to 15 minutes. You can see the bearish reversal pattern that formed on 15 minutes after price filled it. We had a spinning top, we had a doji. Okay, so this is where you would have entered. After this candlestick closed below the low of this spinning top, that would have been the best entry. If you missed this entry, you had another opportunity to have entered sell after the formation of these bearish reversal patterns. These three patterns are bearish reversal patterns. That is where you would have entered. If you had missed this move, this was the second opportunity, or you would have entered after the breakout from this support. Those are the best areas you would have entered. Nice to have entered sell. And if you had entered sell from this point, or let's say you entered sell from this point, your stop loss would have been few pips above this level. Few pips above this level. Let's say 20 pips above. Let's say 20 pips. If you reach 20 pips and you go for 40 pips, by now you'll be out of the market. And if you had even gone for 1 to 3 risk reward, you would have at least 1 to, that's 60 pips. Be out of this trade. So why would you want to take a trade when the market has done over 100 and something pips? If you are considering selling, you should wait for price to pull back to fill fair value gaps before you consider selling. But right now, if I'm going to take any risk on GJ, I'll be looking for buy setup. I will be looking for a buy setup, probably buy to a premium area, then consider selling. But this is not the right time. As you can see, liquidity residing at this previous low has been cleared. You can see liquidity residing at this previous low has been cleared. So it's possible for price to pull back from the current market price. Are you getting me? So that's my take on GJ. Don't sell GJ now. Don't sell GJ. Don't sell GJ. If your bias is sell for GJ, this is not the right time to sell GJ. Okay, this is not the right time. Okay, price is likely going to pull back. Okay, fill the fair value gap before going bearish. That's my take on GJ. Any question? If you have any question, if there's any instrument you want us to look at together, please drop it in the comment section. But this time you've not liked the stream, please give it a thumbs up, give it a thumbs up. And if this is your first time participating in the live stream, I want to appreciate you for joining. Please do subscribe to the channel so that anytime you get notified by YouTube. Please subscribe to the channel so that anytime I come on live, you get notified by YouTube. Thanks for joining. I really appreciate you. Mr. Ned, thanks for joining. It's been a while, Mr. Ned. I hope you're fine. Yeah. Mr. Ned is fine. Hope you're fine. Okay, so which other instruments? Let's look at Australian dollar USD. Dollar USD has been bullish, though the data for Australian dollar was negative. The Australian dollar is still bullish, though it was negative. As you can see, this was released 1:30 a.m. Nigerian time. You can see 1:30 a.m. and it was negative for Australian dollar. So Australian dollar should be weak. Why is it still bullish? Australian dollar is supposed to be weak due to this data. It's supposed to be weak. So why is it still bullish? Why is it still bullish? It's still bullish. It's still bullish. Okay, so one could consider selling. I would be consider going bearish on Australian dollar USD. Okay, so you can see this pullback. This pullback was to fill this fair value gap. You can see this fair value gap. You can see this fair value gap. This pullback would be to fill this fair value gap. So let's see, after this gap gets filled, if a bearish reversal pattern forms, that is when I would sell Australian dollar USD. If a bearish reversal pattern forms after this fair value gap gets filled, that is when I would consider going bearish on Australian dollar USD. Let's see what we have on 1 hour. Okay. So on 1 hour, there's a fair value gap here. This is the fair value gap on 1 hour. Okay. Let's see the pattern that will form after this fair value gap gets filled. So I think they've cleared the liquidity that was residing at yesterday high. I think this was the high for yesterday market. This was the high for yesterday market. The liquidity has been cleared. So there's a high probability they will fill this fair value gap. So bearish reversal pattern after this fair value gap gets filled. They know a lot of retail traders would have sold after the formation of this bearish reversal pattern. A lot of retail traders would have sold and their stop losses will be residing at this high and few pips above this high, which is an area of liquidity. So if it's to sell, they need to place their order where there are a lot of buy orders. I hope you understand that. If the institutions wants to sell, their order needs to be executed where there are a lot of buy orders, and you have buy orders. Excuse me. You have lots of buy orders. A lot of buy orders. All those stop losses are buy orders. When you are selling, your stop loss is buy order. So they know a lot of buy orders are residing at this previous high, a few pips above this high, right? Most people will say their stop loss few pips above this high. If I had taken a trade on Australian dollar USD sell from this point, my stop loss would have been pips above this high, and they are going for those stop losses above this high. The stop losses at this high has been cleared. So look for a bearish reversal pattern. And if you are selling Australian dollar USD, I expect Australian dollar USD to come and clear the liquidity residing at these previous lows. Okay, that's my expectation on Australian dollar USD. Okay, so that's my take. That's my take on Australian dollar USD. If you have any question, please drop it in the comment section. If you have any question, drop it in the comment section. If you also apply your Fibonacci, okay, working with this range, this is the most recent range. If you place your Fibonacci tool from this swing high to this swing low, I think price is currently at a premium area, right? It's above 50. 50 is equilibrium. So you can see price is above equilibrium, is at premium, okay? So you should look for sell, and if it sells, it's going to clear all these lows. It's likely going to clear all these lows. As you can see, we have a fair value gap here. So it's likely going to come fill this fair value gap. Okay, it has filled it at this point. So we still have fair value gaps here that needs to be filled. So this will be your target if you're selling Australian dollar USD. Okay, Euro USD. We'll look at Euro USD in a few minutes. We'll look at Euro USD in a few minutes. Please give the video so that others can get to see this video. Victory said is bullish short term. On which instrument is that? On which instrument is that, Victory? Which instrument? Let me type so that I can see what you. On which instrument? On EU. Bullish short term on EU. Okay, let's look at EU. Let's look at EU. EU. Okay, EU. EU. Few minutes. Let's see EU. EU. Okay. Based on what we have on 4 hour, this is a buy setup, and I think that is to trap retail traders. Okay, that is to trap retail traders. Okay, that is to trap retail traders. If this low has been cleared, the liquidity at this low has been cleared, this would have been a good setup. But the fact that they've not cleared this, the liquidity residing at this previous low, indicates that they are still coming for this. They are still coming for this low. Okay. So on EU, if I wanted to buy EU, I would have risked buying EU. After the formation of this doji, let's go down to 1 hour. What pattern do we have on 1 hour? So on 1 hour, you can see we had an hammer. This would have been the right time to buy. After the formation of this hammer, this would have been the right time to buy. We had a spinning bottom here, a bearish spinning bottom. Wait for the next candle to close bullish before buying, and the next candle closed as an hammer. This would have been a good entry for buy on GU. This is not the right time to buy. This is not the right time to buy. This would have been the best entry for buy, and now it has done 17 pips. Okay, 17 pips. Your stop loss would have been, let's say, 10 pips. 10 pips. Your stop loss would have been 10 pips, and by now you should be out of this trade. You should be out of this trade. Start from this point. So buying EU from selling EU, buying EU from the current market price is at a high risk. You know why? You know why I said it's a high risk if you decide to buy from the current market price? Is at a high risk. Why? You can see we have a fair value gap. This pullback you're seeing in the market could just be to fill this fair value gap. That could just be the reason. This could just be the reason. You can see. And here we have a mitigation block. Can you see this mitigation block here? For those of you trade ICT concepts, this is a mitigation block. Can you see this? This high was mitigated. Can you see that? Can you see? So this is a mitigation block. So if this candlestick closes bearish, there's a probability that if the current 1 hour closes bearish, there's a probability that Euro USD would start selling. If this current 1 hour candle closes bearish, there's a probability that EU would go bearish. If it's bearish, let's see 15 minutes. Okay, so you can see the pattern we have on 15 minutes. Can you see? Can you see? This is an angry man. This is you can see these are bearish reversal. So EU is likely going to sell anytime soon. This is not the right time to buy EU. This isn't the right time to buy EU. This isn't the right time to buy EU. Okay, that's my take on EU. EU is likely going to sell anytime soon. If I want to trade on EU, let me tell you when I will take a trade on EU. Okay, if 1 hour candle, let's see. Let me go to, okay, let's see, this is 15 minutes. Let me see 1 hour. Okay, let's wait for this candle to close. If this candle closes bearish, I want to go down to 15 minutes. Let's see. Okay, so let me see 5 minutes. Okay, 1 hour should close below this area. This is where I will consider selling. If 1 hour candle closes below this low, that's when I will consider selling. 1 hour candle should close below this low for me to sell EU. Is that clear? So that's my take on EU. Buying EU at the current market price is at a high risk. Is at a high risk. Likely going to pull back anytime soon. Yeah, okay, USD Okay, USD Few minutes, please. USD USD Yes, USD Okay, USD If we are bullish on the dollar, then USD should be buy. USD should be buy if we are bullish on the dollar. So you can see last week candle was used to clear liquidity residing at the previous week, I think. Okay, you can see, and also we had a support here. Okay, you can see last candle was used to clear the liquidity residing at this previous low, and so far. So after the formation of last week candle, let's see what we had on daily time frame. Okay, so on a daily time frame, this is what we had on daily time frame. You can see we had an inverted armor here indicating change in trend from bearish to bullish. We had an inverted armor here indicating change in trend from bearish to bullish. Okay, so let's see. Probably a fair value gap was created, and that could be the reason for this pullback. So you can see we had a gap here. We had a fair value gap here. The price didn't pull back. So this, you can see this zone here, this resistance. This is a breaker. You can see this is a. You can see this is a breaker. So after price pulled back to this breaker, that would have been the best area to consider buying. This would have been a good entry for buy on USD after the formation of this candle. This would have been the right time to buy. Are you with me? This would have been the right time to buy GU. Okay, but as you can see, the previous 4-hour candle closed bearish. This is a spinning top, and that spinning top formed at a resistance level. That should likely going to pull back. Okay, this tells you price is likely going to pull back. When a candlestick pattern forms at a key resistance level, you should expect there's a high probability that price will pull back from that area. You can see there's a high probability that price will pull back from that area. So you should expect price to pull back on USD CHF before you buy. Wait for price to pull back on USD CHF before you buy. That's my take on USD CHF. You could just wait for price to do, let's say 50%, at least 50% retracement from this swing low. You could just wait for price to pull back to equilibrium, which will be 50.0. Okay, wait for price to pull back to this area, and I think if we go down to lower time frame, let's see 15 minutes. Let's see if we can identify a fair value gap at a discount area. Okay, this is we have a fair value gap here, just this fair value gap, and this gap has been filled. Okay, so just for price to pull back, that's what I would advise. Okay, wait for price to pull back to at least equilibrium before you consider buying USD CHF. My bias for USD CHF is buy. Okay, bias is buy. I hope that is clear. Okay, my bias for is buy. It's buy, but wait for a retracement. Wait for a retracement before you buy. That is what I would suggest. Okay, wait for price to pull back. Okay, and if you don't want to wait for prices, another way. If price does not pull back, you would also consider buying above if 1 hour candle closes above this high, if price does not pull back, you could consider buying. You could consider buying if 1 hour candle closes above the high of this candle. If 1 hour candle closes above the high of this candle, you could consider going bullish above this level. Your stop loss will be few pips below this level. Let's say 20 pips. You could just use 20 pips. 20 pips as your stop loss, and you can set your TP 40 pips. Okay, so it's either price pulls back to equilibrium or price breaks out from this resistance. Wait for 1 hour candle to close above the high of this candle before you buy. I hope that is clear. Because everything in trading is, as you know, is probability. It's probability, okay? So you might want to wait for price to pull back and price does not pull back. So you should look for other options, okay? There should be a plan B, okay? And the plan B is if 1 hour candle closes above this high, that will be a buy. That will be a buy, okay? I hope that is clear. So you can see, we could say on 15 minutes, USD CHF has been in a range. So it's likely going to break out from this high or break out from this low to sell or break out from this high to buy. So if you are buying up from this point, your stop loss should be few pips below this low. And if you are below this low, your stop loss should be above this high. Keep it simple. Any question? Is there another instrument that we need to look at? Let me know in the comment section. Any other instrument? Any instrument? Any question? Do you have any question? Any question? Any question? Those of you in the VIP will be meeting tonight by 9 p.m. If you're in the VIP group, we'll be meeting tonight by 9 p.m. 9 p.m. Okay, 9 p.m. we'll be meeting tonight. Any question, any question, any question, let me know. I want to believe you've got value from this session. Do you have any question, Mr. Raphael, Mr. Emmanuel, Mr. Mayor, Mr. Ned, Williams, Mr. Debayo, Mr. Joseph? If you have any question, drop it in the comment section. If you have any question, drop it in the comment section. Is there any other instrument to look at? Let me know. Let me know in the comment section. Okay, let's look at Euro Australian dollar. Euro Australian dollar. Like I told you guys, Euro. If you joined the session we had, I think it was on Monday, but during the weekend session, I told you guys Euro is bearish. I made it clear that Euro Aussie. I told you to clear the liquidity residing at this equal. You can see. Right? You can see. I told you it's going to clear this liquidity. It's likely going to fill this liquidity void. Okay, we have lots of fair value gaps here. This liquidity void is likely going to come fill it. But price does not move in a straight line. There will be pullbacks, there will be retracements before it fills all this gap. It won't drop and just fill all the gap once. No, there will be opportunity to buy also while it's bearish long term. There will be opportunity to buy. You just have to know what you're looking for on the chart for you to buy. AJ, okay, let's look at AJ. Few minutes, AJ, okay. AJ. Okay, let's start with the daily. So what I see here is a bearish setup. 4-hour time frame. You can see the previous 4-hour candle closed as a star. But let's see how yesterday candle closed. Let's see. Okay, so yesterday candle closed as a spinning top, and I think today the liquidity that was residing, you would agree with me that a lot of retail traders would have executed sell last night after the formation of this candle. This is a spinning top, Many traders would have executed sell and their stop losses would have been at this high and few pips above the high. They have cleared the liquidity residing at this previous high. Most likely, maybe a fair value gap was created after the formation of this candle. Okay, after the formation of this candle, let's see if a fair value gap was created on a lower time frame. So we had a fair value gap here on a lower time frame, though this gap got filled, right? This gap got filled at this point. Okay, so after the formation of this gap got filled here. So let's see after the formation of this candle, let's see if a fair value gap was created. Okay, so let's see. Okay, let's see. So this you can see what we have here. We had it as the reason for this pullback. Let's confirm. Let's confirm. Let's go to 15 minutes. Let's confirm. Don't just assume. Okay, let's not just assume. But I think a fair value gap was created there. So you can see the fair value gap here on 15 minutes time frame. This could be the reason for the pullback. And you see this fair value gap. That could be the reason for the pullback. And I think that gap has been filled. Let's see. Let's go back to 1 hour. So you can see. Can you see? Can you see this? This? Can you see the reason for this pullback? Can you see? So after the gap got filled, what pattern formed there? Can you see the pattern that formed? Can you see it? A bearish reversal pattern. This is a shooting star on 1 hour. This is a shooting star. So this would have been the best entry after this 1 hour candle closed below the low of this candle. This is a sell setup. This is a sell setup, and if you sell from the current market price, it's likely it's coming to fill this fair value. Okay, it's likely coming to fill this fair value gap. So this would be your target. If you sell Australian dollar JPY from this point, your stop loss, let's say on 25 pips, your TP should be at least 40 pips. Your TP should be at least 40 pips. So your TP should be at this area because I believe there's a fair value gap that was created after the formation of this candle. Okay, the fair value gap was created after the formation of this candle. Let's confirm on 15 minutes time frame. So you can see the value gap here. So price is likely going to come and fill this fair value gap. So this will be your target. Let's say that is up to 40 pips from this point to this point. This is about 50 pips. Okay, so that's my take on. So you can see on 15 minutes that the pattern we have here is also bearish. It is also bearish. Price has broken this support and it's also broke this support. That tells you that supply is higher than demand. When support is being broken, it tells you that supply is higher than demand. And when supply is higher than demand, what is expected? Price is expected to drop. Price is expected to drop. And you can even see on 15 minutes, this pullback on 15 minutes was to fill this fair value gap here. Can you see this fair value gap that was created here? Can you see? So this pullback was to fill this fair value gap, internal range liquidity. This pullback was to fill this fair value gap. You can see that. So it's for AJ. That's my take on AJ. Okay, that's my take on AJ. Mr. Mayor is like you joined the session late when I analyzed on DXY. When I analyzed dollar index, it appears you weren't in the class. You just joined. Okay, I said DXY is aiming for a fair value gap. Okay, this fair value gap, this is where it's aiming for. This is where it's aiming for. It wants to come fill this fair value gap. Okay. So it could be bearish at the moment, but when it gets to this zone, it's likely going to start buying from this zone. Even if a bullish pattern forms on 4-hour time frame, it might not come to this fair value gap. Okay, it might not come fill this fair value gap because you can see here you have this is a mitigation block. Can you see this? This is a mitigation block. It could just test this resistance turn support. This resistance turn support. ICT students will call this what's it called? Mitigation. Yeah, mitigation block. They will call this mitigation block. This is a break and retest. Break from resistance, then retest. It could just test this and pull back. It might not fill the fair value gap. I hope you're getting me. It might not fill the fair value gap. It might just test. So all I'm looking out for is a bullish reversal pattern to form on 4-hour time frame. Okay, if a bullish reversal pattern forms on 4-hour time frame, that is when I would go bullish. Okay, so you can see even now on 4 hour, it has tested this support and there's a rejection from that support. So if a bullish reversal pattern forms, that's a buy for me. That's a buy for me. Let's see 1 hour. Let's see 1 hour. Okay, this is what we had on 1 hour. Now, if you go to 15 minutes, you will see the structure clearly on 15 minutes time frame. What structure do we have on 15 minutes time frame? What structure do we have on 15 minutes time frame? Shift in market structure occurred at this point. You can see the shift in market structure occurred at this point. So if you look at it here on 15 minutes time frame, this is a bullish structure. Am I correct? Confirm. Am I correct? On DXY, what structure do we have on 15 minutes time frame? Is it a bearish structure or a bullish structure? Price is pulling back because price is at a premium area, so the pullback is necessary. You can see this if you work with this previous range, you can see. So that's the reason for the pullback, which is necessary. Okay, price is at tested a premium area. You can see there was a fair value gap here. Can you see this fair value gap? Can you see this? So, and this fair value gap formed at a premium area. So it's necessary for price to pull back from that area, pull back to a discount area, which at the discount area, we have this fair value gap at discount, which is likely going to come and fail before going bullish. I hope that is clear, Mr. Mayor. You see equal lows on DXY at 103.75, 103. Okay, this equal lows. Okay, equal lows. Let me use daily H4 follow. You refer, that's what you're pointing at, Williams 103 points. This relative equal low. This relative equal low. I think that's what you're referring to. Okay. Let's see how it plays out. Let's see how it plays out. But I believe what we have here, you can see the structure we have on 4 hour is a bullish structure. Right? The structure we have on 4 hour, you can see it. What is the structure on 4 hour? What's the structure? Shift in market structure occurred at this point. After the candle closed above this high, the shift in market structure occurred at this point. At this point, this swing high. This is where the shift in market structure occurred. And you can see it's been disrespecting previous high. Can you see? It's been disrespecting previous high. So this is a bullish structure. This is a bullish structure. This pullback could just be to fill this fair value gap. You can see this fair value gap. This pullback here could just be to fill this fair value. It has accomplished. It has accomplished that. So the is bullish. Is still the structure is bullish. The bearish setup, I think, is a short time sell. Short time sell. Short time sell. Unless there will be a major news that will influence that will give on dollar strength. Unless a major news, and I don't think we have news to give dollar strength today. I think it's tomorrow. We would expect a major news. Okay, tomorrow GDP. Okay, that could give dollar strength if it is positive for the dollar. If it is positive, it could give it strength. But at the moment, to make that happen, no fundamentals. But we never can tell. Trump can tweet and it would influence, the price action. Trump can tweet and it could influence the structure. Okay, but technically, DXY is bullish technically. Any question? Any question? Any question, let me know in the comment section. If there are no questions, that will be the end of today's session. Any question, any question? Any question? If there's any challenge you're going through in trading, share with us, let us know. Let us know what is the challenge, let us know. We have a lot of profitable traders in this session. Okay, a lot of profitable traders that prefer a solution to whatever challenge you're going through in the market. Don't keep it to yourself. Don't keep it to yourself. Okay, don't keep it to yourself. Don't keep it to yourself. If there's any challenge, let us know. Drop it in the comment section. Okay, drop it in the comment section. Any question, any question, please, if you're here to like the stream, please give it a thumbs up. Give it a thumbs up so that others can get to see this video. No question, no question, no question. No question. All right. I really appreciate you all for your participation. I appreciate you all for your consistency. Okay. I really appreciate it. And my greatest desire is to see every one of you earn consistently from the market. That's the reason for my showing up every day. Okay. So see you all succeed, excel in your trading career. That's the reason I do the things that I do. Never give up. I know most of you might be, I know you're encountering some challenges at the moment. Don't give up. You are almost there. You are almost there. Don't give up. Don't give up. Okay? Don't give up. Keep pushing until you win, until you conquer the market. Don't be discouraged by the losses. Losses are normal. You learn from those losses, okay? Learn from those losses and ensure that you don't repeat those mistakes. Learn from those losses. Every trader experiences loss. Okay, every trader experiences loss. Only one experiencing losses. You just need to ensure that you are maximizing your profits and minimizing your losses. That is the secret to profitable trading. And if you have any challenge, feel free to ask questions. Feel free to ask questions. You don't have people around you that will provide solution to your forex challenges. You don't have them. It is when you belong to a community or when you attend classes like this, you ask questions because you have like-minded individuals in such community. Don't keep it to yourself. Ask questions. Read books. Watch videos. Okay? There is no challenge you're going that other traders, successful traders have not. Always ask questions from those who are ahead of you. It's to your advantage. Do not be shy to ask questions. No one is an island of knowledge. I'm still a student of the market. I'm still learning also. So don't be shy to ask questions. Always ask questions. All right, guys. That will be all for today's session. Hopefully tomorrow is Thursday. Okay, we'll be tomorrow. There's a major news tomorrow. Tomorrow's session could be in New York session. Tomorrow's session will be in New York session. So that'll be all for today. I appreciate you all. Do have a wonderful day. Bye for now.